Hey everybody, how's it going? It's Russell Matthews here, and today I want to show you this video that talks about one of the things I hate most in the world, and that is extremely high interest rate predatory loans. It's something I don't even think should be legal in Canada, and you probably don't even realize just how disgusting this sort of thing is. It's one of the biggest financial traps that keeps poor people poor, and that allows these big corporations to take advantage of people just trying to make ends meet. Grab a black coffee, I know I've got mine because we're going to need it for this video.
Your $6,000 loan cost you $20,000.
It's turning on.
Shocking interest rates.
46.93.
46.
39.99.
It's almost a license to print money for them.
They want to keep collecting money.
What's really behind the sales pitch?
Very shady.
Okay, it's a good intro, but I've got to comment on something. For a topic that's potentially so serious, I'm surprised they chose to go with the cheesy rom-com 2000s high school movie music.
Really disappointed.
Putting lenders
listen to
the
this.
test.
It's an abuse of our most vulnerable.
It just doesn't fit.
Protection.
This is your marketplace.
This is the front of the house, and this all had to be torn off.
Okay, she's doing
The
some
cement
renos.
was also rotten.
In Barhead, Alberta, Teresa Morton's giving us a tour of her 100-year-old home.
So
100
this
years old.
whole
That's a lot of maintenance.
back of the house to here all had to come off. And we had already put the new kitchen in, the cabinets, the flooring. So we just had to rip it all out.
She can laugh now, but it's been a painful reno for Teresa and her husband.
Is it fair to call the backyard of your house a money pit?
Yes, for sure. Yeah. So where those windows are up there, that is the end of the original house.
wow.
And all we wanted to do was put this on. That was it.
Oh, so it's an
The
addition.
$68,000 reno quote balloons into a $175,000 job.
Wow.
Way more than they borrowed from the bank.
That's intense. When it comes to real estate renovations, I always recommend the people that I work with budget an extra 10% on their renovation budgets, just because you never know what expenses are going to pop up along the way. But that is a big difference, way bigger than the 10% I usually see.
We didn't know what we were going to do.
Then help arrives in the mail.
This card came and it said, "You've been pre-approved for $20,000. So we just looked at each other and we were in the car. The next day we were in there.
Don't do it.
The offer is from a lender called Fairstone Financial, but it comes at a huge cost.
The interest that they charged us was 27.99%.
27.99. That's worse than the interest rate on most credit cards. That's a super high interest rate. I'm sure there could have been a better option for getting extra money. Like if they own their home, they could potentially get something called a HELOC, right? A home equity line of credit that could help them finish up their renovations. That would be way lower, maybe closer to 6 to 11 or 12%.
That's more than 17 grand in interest over 5 years on top of the $20,000.
If we had not been so desperate, there is no way we would have signed on a dotted line.
It's for people who are in desperate
Now
situations.
we're heading into the world of high interest lending.
Do you want me to turn it on?
Going undercover with our marketplace tester, Mena.
We're ready?
Cash money up to $10,000.
We'll let you know if you've been approved on that.
Money Mart up to 15 grand.
How much you can borrow, how much the different interest rates are.
Fairstone Financial, where the offer is up to $35,000.
Not a bank, okay, or a high-risk lender.
Wow, they're even saying they're a high-risk lender. Man. If you don't have any sort of relationship with the people you're borrowing money from, whether it be a bank, a credit union, or any sort of private lender, you're probably going to be paying higher rates than you likely need to.
So what's the interest?
3.94.
Sorry, 3.94 a year? 3.94% a year?
No, like monthly.
Ooh, that is scummy. Normally when interest rates are advertised, it's advertised on a yearly level, but they're advertising 3.49% monthly. That seems like an absolutely blatant attempt to trick people into thinking, hey, 4%, 3.5%, that's not an awful interest rate to pay, when really they're paying what? Like that's closer to 50% interest per year. Seeing this sort of stuff just makes my skin crawl because it's so predatory and it's targeting these people who are just trying to get by.
Yet sky-high rates up to 60% a year are legal in Canada. And it would help if this Money Mart sales rep knew how to explain them.
46%?
That's in the full loan.
So 46.9%
It's the full term.
full term. So 3 years would cost 46 or each year?
46 for the full 3 years.
Okay, so not each year.
No, that would be killer.
Okay, so these people are saying that it's 46% over the course of 3 years. Now that's something I've never heard of, interest rates talked in terms of 3 years over the entirety of the loan. Normally they just break that down to the yearly basis. So I wonder if this person is actually misleading them, or maybe they don't even understand their loans, or whether or not it is actually sort of structured like this over the course of 3 years. My chances are, or my guess is, that it's somebody who doesn't really even know what they're selling.
Is around 5,215.98 interest.
Exorbitant, outrageous. It's okay to make money, obviously, but doesn't mean you have to, slaughter your clients and your fellow citizens.
Yeah,
Now,
that's so
to be
true.
fair,
I want to talk about that. There's a really fine line when it comes to lending in it being helpful in some situations and in it being really predatory in others. The right type of credit can actually be hugely beneficial for people in their lives, right? If somebody wants to start a business, they're going to need some money and they're going to need to borrow money, and they need to have access to this money in the form of credit. But anyone borrowing at 50% interest rates, it's pretty much guaranteed that they're going to fail at whatever business they're starting. Or even if they're borrowing this for their personal lives, it's pretty much a death sentence for your personal finances.
Take Easyfinancial, for example. We find out it borrows at 5%, lends out at more than 40% on average, and pockets the difference.
Look at this chart. Oh my goodness. What they're doing here is something called interest rate arbitrage. So essentially they'll borrow from a big bank or some other big lender at a lower rate, at a more reasonable rate, that 5%. And then they'll go out and lend money to people who may not be able to get that 5% interest rate, and they'll lend to them upwards of 40% or even higher. And of course they get to keep the difference between these two numbers. They borrow at 5%, lend out at 45%. It's no problem for them to service that 5%, to pay the interest on their 5% loan, because they're making 45% off of some sort of well-meaning citizen who's just taken out this loan to make ends meet. Now, this whole arbitrage strategy is something that smart investors actually do regularly, right? If you can borrow money at 1% and you feel like you can make 8% on that money long term, then it makes sense to borrow that money. But I absolutely draw the line when you're making that money off of the backs of somebody else's misery.
Cash Money tells us it proudly offers credit to underbanked Canadians. And Money Mart, well, this company tells us that employee, they weren't trying to mislead our tester, but they do admit that interest explanation could have been handled better.
Okay. I can't stand the type of language that these lenders are using. They're saying we're serving underbanked Canadians. Like, come on. That's slang for we're taking advantage of Canadians who were never taught how to build a good credit score so that they could go to traditional banks. So really, there's two parties to blame here. These people who are giving out these predatory loans and ruining people's lives because of the amount of money they have to pay back, and also the government for not including some sort of financial education in our curriculum in schools. That's one of my biggest pet peeves, and I could talk about it all day, but we'd never finish this video.
Artist Marty Smith couldn't pay off his Money Mart loan early, and says when he went to the store to close the $1,000 loan, they wouldn't let him.
You wanted to pay cash.
Yeah.
You want to finish it off, seal the deal, close it off.
Final payment. All done. Then I couldn't do that. You're dealing with a person on another side of a glass wall, and she won't take my payment.
He says they wouldn't tell him how much he owed, and said the payment had to come from his bank.
I would have made a $70 payment. I would have gone in and made the $113 payment if the woman behind the glass would take it and say it was a final payment.
But they wouldn't take your cash.
As far as I could tell, you can't close the loan. And they don't want you to make a final payment because they want to keep collecting money from you.
They're just straight up taking advantage of people with no way out.
Seems that's what happens to Teresa, too. After she and her husband pay by bank draft, they're charged another $180 in interest. And it isn't over yet.
I went back over all my transactions and I went, oh, look at, they took another payment after we paid them already.
More than $600 is taken from her bank account.
And I said, well, then please stop taking it out. Like, don't take any more.
Are you kidding me? So not only are they loaning out money in a predatory way in the first place, but when people actually go to close it, they'll continue to take extra payments from their bank account. And of course, people who take out these loans, they're busy, right? They're trying to work. They're trying to make it through their lives. Do you really have the time to go down this rabbit hole of getting in touch with head office and trying to sort things out to get your money back? My guess is that most people who close out these loans and get charged these extra amounts just let it go. And these lenders probably know that too, which is why they're not stopping this sort of behavior.
Karen Fournilier's been off work since mid-March, thanks to the COVID pandemic. Way back before the pandemic, Karen borrowed from Fairstone and got talked into buying loan protection, disability, and life insurance.
So they provided her with insurance against this loan, right? If she couldn't pay back this loan because she lost her job, that's what this service is, right? So if she loses her job, they're going to sort of do something to stop her payments. I have a feeling that they're not actually going to allow her to do that.
We do offer loan protection. We do offer life, disability, and unemployment.
At Fairstone, Seems insurance just gets rolled into the payment quote.
It's an additional cost, right? The insurance?
It's $68.75 that I gave.
So it's already included?
Is almost made it sound like it's mandatory.
So they
you should
baked
take
it in.
and there's no reason for you not to take it.
Like it's a package.
Yeah, and most customers, they're like, fear factor has been used on them. You could lose your job. You should better take this thing.
When COVID hits,
That's the worst, because people don't know what they're signing up for, and they sign up for this thing that they could be dealing with for years and never dig out from under. Jeez.
Your claim does not qualify for involuntary unemployment benefits.
The insurance won't cover her loan.
I was really disappointed because clearly I'm not working, and I had given them evidence and records showing that I wasn't working, and even my last pay stub.
She's paying for insurance and she's not getting the payout from that insurance.
A month.
It's actually $115 per month.
On top of the loan.
Okay, I didn't know that.
Over 5 years, she'd pay nearly $7,000 on insurance. Because guess what? Fairstone charges interest on that too.
$7,000 for insurance they're not paying out now that the claim is actually
on
filed.
the spot. Our tester wants to see a contract.
Actually, just one last thing.
Before signing anything.
Do you have like any copy that I could look at? No?
Like that's all printed through our computer.
So they
It
can't look at
happens
the contracts?
everywhere.
If you can show me the contract from now or like a template of what it...
Like, I cannot give you someone else's contract, right?
Do you have
give
like
them
a
a blank
copy that I
contract.
could take a look at? No? Okay, so I apply and
this makes me
I
wanna
sign the
puke.
form and the contract, and then like when will I find out about the details though? Right, okay.
After you sign on the dotted line.
That's not legal, is it? As a realtor in the Greater Toronto Area, I work with contracts like this all of the time. And there's actually some pretty huge legal obligations to make sure that when someone is signing a contract, they're not under any form of duress, which means that they can't feel any pressure to sign that, or they can't be sort of rushed through the process like what's happening right here. And in this case, they're not even allowed to look at the contract before they sign it.
I actually blame our government for this. This is beyond crazy or negligent.
How can an industry like this not be regulated enough to stop this sort of thing from happening? So it's like the government is failing on two accounts, right? They're not educating people so they understand what they're signing, and they're not even regulating the industry so that people are forced to be able to see what they're signing before they're signing it instead of being forced into this contract. I'm usually a pretty calm guy, but if you're watching this and you follow this channel, you can tell I'm getting pretty upset about this. I'm still smiling because that's what I do, but this is me pissed off right now.
what do you think, Alex, of all the hidden camera footage that we just showed you?
It's tough. Canadians need protections from all across the country, and it should be regulated federally.
Yeah.
So we want to talk to Christia Freeland on
Christia.
camera. She could push to lower that 60% rate and regulate the industry. Her office says she's busy.
Oh, wow. She declined to comment.
But in Edmonton,
That's not
New
a good look.
Brunswick, Senator Pierrette Ringette wants to talk. For years, she's been a lone voice in Parliament.
Would be capped at 20% plus the Bank of Canada overnight rate.
Okay, that's
fighting
reasonable.
to bring down the legal interest rate.
I hope all of our parliamentary colleagues are listening to this, because I'm going to need their support in order to lower that criminal interest rate.
Wow, well good. I'm glad there's somebody who's looking out for people. And in my opinion, it's really the government failing us on those two levels that I've talked about, right? In education in our schools, there's no financial education or very, very, very minimal financial education. And at the same time, they're offering these extremely predatory things that if you don't have a financial education, you may not understand how awful this is for your personal finances. And to be honest with you guys, I knew these payday loans were really bad, but I wasn't aware of how bad they've gotten. And I feel extremely privileged to be in the situation that I am, never having to sort of go to these extremes and having to get one of these payday loans just to survive, right? And I recognize that this is a place that people go when there's nowhere else that they can go. But there can still be lending options like this without having extreme interest rates up to 50%. That's where we need regulation. But until we get it, if you're somebody who's in a position that you need this extra money, I would do absolutely everything I possibly could before going to one of these places, because guaranteed you're not going to be able to dig yourself out of the hole that they throw you in by offering you these high interest rate loans. Hopefully over time and with more and more education, people will be able to build up the credit score that's required to get a traditional loan from a bank or a line of credit or something like this that is at a lower interest rate that can allow you to do what you need to do with your life. And I fully recognize that's easier said than done, but it is possible for every single Canadian. That's what I believe. And I want to know what you have to say about all of this down in the comments. Let me know. I read every single one and I try to reply to as many as I possibly can. If you want to keep the discussion going and maybe even learn a little bit about personal finance and real estate along with some of these new policies that are coming down the pipeline from our government, then feel free to hop into our community Discord channel. There's a link down there in the description and there's people talking there every single day about tons of different topics. So if you want to be a part of that community, feel free to hop in. And of course, if you haven't already done so, make sure to hit the subscribe button and the notification bell. And if you appreciate seeing Canadian content just like this, which I think there's a huge shortage of out there, then feel free to send this video to somebody who you think might enjoy it or might even learn something. And with all of that said, thank you so much for watching, everybody. I really hope this video helped you out at least a little bit, and I'll see you next time.